Good morning, everyone. Hello and welcome. My name is Lindsay Lear. I am the Managing Director of Payments and Commerce Market Intelligence, and you have arrived at our The One Thing to Care About in Latin American Payments webinar for 2025. Focused on Latin America today, we will be taking you through what we believe the one thing that is essential to focus on in key markets in Latin America this year in 2025. Now, many of you from our audience who have been following us, you've become accustomed to our Mega Trends webinars that we do around this time every year. We decided to shift the focus a bit this year simply because the wild complexity that the payments industry has undergone in the past year, in the past 5 years, really, and it's getting harder and harder to nail things down to a series of mega trends and have it really be impactful and directional and actionable for you. So we wanted to simplify things, help drive prioritization, and give you some messages that you can really walk away with and in a strong way today. Okay. So I'm so excited that you're here. I'm thrilled to be hosting this event. Those of you who followed us for the past couple of years know how rich and exciting this content can be. So I'm just glad you're here. Our standard legal notice, please take note. And I want to take a moment to introduce my fellow panelists who will be joining us today, both Cesar and Ana Bellet, representing Brazil in Mexico City. Cesar, please say hello and introduce yourself.
Hi, Lindsay. Good afternoon, everyone. Cesar Borali, Managing Director here at PCMI, covering Brazil, FinTech, cross-border, B2C, B2B payments. So very glad to be here.
Excellent. And we also have Ana Bellet. Hi, Ana Bellet.
Hi, everyone. I'm so glad to have you here. I'm a member of PCMI in Mexico City and super glad to get to share today with you.
Terrific. So these guys will be joining me in the conversation throughout. And I want to start, before we get to our content today, I want to do something a little bit different and give you an update on our evolution as a company. All right, a lot of you have been following us for many years, from our evolution from AMI into PCMI, our global expansion, and really been following us to stay up to date on not only Latin America trends, but global trends. And we've had a very exciting journey as a company in recent past, and I just want to give you guys, you all are our biggest cheerleaders and our biggest supporters and our partners and allies in what we're trying to do as a company. And so I just wanted to give you a quick update, right? Some of our biggest successes in 2024. We grew over 65% in 2024. Okay. Those of you know, we rebranded from AMI to PCMI in 2022, marking our global expansion. And as we move to the global stage, the opportunities are seemingly endless. And we are so thrilled to be in this position to be seizing these opportunities. Now, Latin America still represents the majority, a very large part of our business, and it's really our home, our prized home. And so it's not that we're moving away from Latin America whatsoever, but we've been able to experience this wonderful exposure to global trends and problems around the world and bring those insights to the region. I think you'll see that reflected here. And you can see, just to get a sense too of trends, what are the top things that we're working on, right? These are the different verticals that we've been active in the past year. Just general payment trends, cross-border, the number 2 topic we've looked at, consumer digital banking, e-commerce, blockchain acceptance, just to name a few of the verticals that we've been active in the past year. Our global coverage. So just thrilled to announce that, last year we covered 51 markets. You can see the Western Hemisphere is almost completely covered by our work, and we've increasingly done work in Asia is our second leading region, and then Europe and Africa and Middle East. We're increasingly growing our expertise and our coverage of those regions as well. Now, I wanted to also take a moment. A lot of you have followed our content, our thought leadership, our webinars, and get great value out of that, but you may not necessarily know what we do, how we make our livelihood, what clients of PCMI actually get when they work with us. And I want to take a moment. You'll see me using this type of language when you interact with me, just so that our audience is really clear on what we actually do for our clients. And we kind of have 3 buckets of services: market intelligence, decision consulting, and change implementation. And our research is only a small part of what we do. We conduct this research on our own or for specific clients, convert that research into value for the client so that they can make assertive decision making, right? We want to help the companies we work with excel and propel themselves forward and solve a lot of the pain points and the bottlenecks and issues we experience in the industry. And this is the actual value that they receive when they work with us, right? Seeing clearly in this increasingly complex and chaotic environment, clients are able to see themselves, their competitors, regulators, and make accurate forecasts. Gain influence. This is a huge thing that we do, coupled with supercharging clients' sales teams, giving you the information you need, giving you the talking points you need, the narrative you need, the authority you need based on data that helps you assert your point of view with clients, with stakeholders, with partners, etc. Making those decisions and then implementing those decisions with sharp, definitive, decisive action, right? We do that through product development, RFP management, partner negotiation, overall project management to help you take the research and the data that we're presenting you on a day like today, make it meaningful to you through insight, and then make that actionable to you through implementation. Yeah. And some of these are just some examples of what this really converts to when we're working with clients. These are some of our client successes last year, right? For example, through a competitive benchmarking exercise we did in payment acceptance, we were able to convince senior management to invest in specific product enhancements in a certain vertical so that they can grow their business in that particular area and be successful against competition. In an acceptance market landscaping exercise we did, a huge win for us and our client was that research actually impacted local interchange rates, which is so fantastic. And we love to see that level of impact for us, right? Through a future of payments strategy workshop, we were able to help C-level executives identify which value-added services they need to invest in the next 3 to 5 years as the industry is evolving in the medium term, right? So these are just some concrete examples of how we actually convert this data and research into action and business success. Now, what do we not do? This is just as important as what we do. And some of these might feel familiar to you if you've worked with certain partners before, who are maybe not going to deliver as powerfully on the results that you're looking for. At PCMI, our commitment to our clients is to not do the following things, right? Tell you what you already know. You do not invest in a strategic partner to tell you what you already know. We are not superficial, vague, or inauthentic. We don't overly depend on business school frameworks and consultant speak. All right. We depend on rich data and local nuance that really differentiates you. We don't overcharge and underdeliver. We never settle for good enough, and we don't stop until we've added massive value. Now, this is how we want to differentiate from possible other consultancies that might over-index on their brand image and their prestige in the market. This is our promise and our commitment to our clients. And then finally, a final kind of exciting announcement I have is a lot of this that you're seeing me do. I've never really done this before in a public forum, but this is coming out of a training that we invested in at the end of last year, a high performance training for our entire team. We did an intensive in Miami at the end of the year, and this is a year-long process that we're going through, and honestly, probably an investment that we'll make in perpetuity. What we're doing is we are learning and committing to the principles based on the largest study of high performers that has ever been done globally, over 200,000 high performers, learning the principles and habits of the highest performing professionals in the world. And so when you work with us, you are getting access to these habits. And this is our commitment. Whenever you interact with anyone at PCMI, you're going to be experiencing high performance. And we demand that of ourselves. And we're actually seeing our clients rise and set the bar in terms of their own expectations for themselves as we are operating in this very systematic, very specific way. All right. So that's just a quick update on PCMI. I hope you find that interesting and also exciting. And those of you who know me personally and know us, I think you can feel that passion and energy from us. And we just wanted to take this to a new level as the company continues to grow. Now, before we're about to get into our content, and I just want to take a moment to do a quick poll of you guys, just so we can sense, what are your needs as you go into this year? What are kind of, what business decisions or business challenges are you facing this year? So we can best figure out how to customize our services and our value proposition for you guys, and also bring you content that is going to best speak to these needs. So just for the sake of the recording later, empower and better guide my sales team, position my brand, become more persuasive with clients and partners, understand my competition, risks, and opportunities, quantify and mitigate risk, make a high-value decision, convince internal stakeholders to make an investment, and take a definitive action on a recent decision. So we will leave that up for just about 10 more seconds. Looks like clearly understand my competition, risks, and opportunities is the leading one there, which is fantastic. All right. We'll go ahead and end that. And thank you very much. I'm going to share this just because I do think it's interesting, just for anyone. Oops, never mind. I might not do that. Little technical failure there. No problem. Thank you guys for sharing that, for sharing with me. This is very useful for us as we seek to bring you the best value possible. All right. So we will go ahead and get into our content today. And then we're going to have Cesar and Annabelle kind of share from their perspective as well. Before we get to the one thing, I want to just have a couple slides here to update and put us all on the same page in terms of the Latin America context. All right. You all know we do a lot of data crunching, number crunching, looking at payment methods, looking at payment method share, e-commerce, digital payments in general. And we've recently concluded this exercise looking at all of consumer expenditure in Latin America, including things like rent, things like mortgage payments, things like insurance, healthcare, education, things that are a little bit more traditional and outside the realm of what we might typically consider in the retail payments industry. So what we've discovered is looking at all of consumer expenditure, 60% is now electronic. All right, we can see these three big buckets here: cards, money movement, which includes traditional ACH, checks, boleto, Pix, anything, any type of instant A to A, including wallet A to A, and cash. All right, today in Latin America, cash has declined to 37%, down from 57% in 2022, okay? This is outstanding progress, an outstanding success for the region. And it's just been a complete pleasure to witness the innovation that has come about as a result of this. But I want to call the attention to look at how much discrepancy there is now than ever before. There are different Latin Americas. Brazil and Chile are in a world of their own, right? We have Caribbean and Central America still with, 2/3 of payments taking place in cash. So we really have to start to segment out the region more intentionally than ever before. And what I think these numbers are showing us is, in the past couple of years, with the launch of Pix and the expansion of instant payments around the world, there became this narrative of cards versus RTP and who's going to win and how is RTP taking away markets from cards, et cetera. That narrative is no longer serving us, right? Because we have such advance of digital payments now. And money movement is really the biggest bucket that we need to unpack and see how we continue to add value here. If we go into a little bit more detail, we can actually separate out instant A to A from traditional money movement. And this is where you're going to have traditional bank accounts, bank transfers that take a day or more to settle, checks, boletos. And notice that when we look at this breakdown, cash is still the biggest payment method, all right? The biggest singular payment method, followed by traditional money movement. Credit, debit, and instant are all now digital versions of payments. And so it's becoming apparent that cash is still an enemy, if you like, for us to go after, but traditional money movement also represents big opportunity for innovation, especially in countries like Brazil and Chile, where cash has really declined and is less than 20%. Okay, so here in this graph, you see the breakdown by country, and you can see just what the simple average looks like for the region. Okay, before I forget, please do go ahead and ask us your questions in the chat. We will have a Q&A at the end, so feel free, even if it's a comment, you want to contribute to the conversation and somehow, go ahead and throw your comments there in the Q&A. Okay, all right, so given this environment, all right, where we have quite a rich digital payment environment, but a lot of distinction by country, what we've done is really divided the region into 3 buckets, 3 clusters of what does the next wave of digitization look like, or what we're calling diagnosis of cash usage in Latin America, right? Brazil and Chile have less than 20% cash penetration, and we're calling these digital expansion markets. Cash is mostly used in rural areas. There's not that much opportunity to continue to digitize cash. What does that mean? To add value here, you're moving into traditional money movement verticals, housing, insurance, utility, or you're adding value to existing digital payments, okay? Now, what's a little bit more interesting from a cash perspective are these verticals that we're calling acceptance growth and infrastructure growth. So in acceptance growth markets, the digital payments pie is going to grow through acceptance, right? In Argentina, Colombia, Mexico, Peru, cash is used still in 3 main ways: at small merchants, where there's no acceptance or a lack of acceptance, for basic needs like food for underbanked people, and then similar to Brazil and Chile, under digitized verticals, right? So acceptance growth through small business, through improving the value proposition for small business and coming up with innovative payment acceptance plays for specific verticals are how we're going to move those markets forward. Now, in Central America and the Caribbean, as well as some Andean markets, cash is still used heavily throughout the economy at more than 60%, around 60% of consumer payments. So this is where there's still a lot of infrastructure to build. And what's really needed is regulator, private sector cooperation to increase fintech participation, increase competition, improve pricing, right? There's still work to crack open the market, to make it more dynamic, agile, with a greater variety of products available to promote financial services more deeply through the economy. All right, so this is just some segmentation I hope is helpful for understanding where we're at. And then a final slide here is that as payments industry companies develop their strategy going forward, there's 3 ways to grow for continued growth of digital payments. There's 3 ways. One is to add value to existing digital payments, right? On top of card rails, on top of instant payment rails, all of the value-added services, security, loyalty, omnichannel, user experience, open banking, and credit. These are all fast-moving segments that all need improvements and solutions to varying extent across the region. The other 2 ways is digitizing traditional A to A, right? Traditional money movement by targeting new verticals, by considering embedded payments, by innovating in B2B and commercial payments. That's how we get these traditional slow payments into a digital environment. And then there's still plenty of opportunity to digitize cash. Now we know 3 main strategies have worked: implementing and scaling instant A to A, right? That's been a huge cash killer around the world. Expanding card acceptance footprint and empowering fintechs and new partners. This is how cash has taken such a dramatic nosedive in major markets in the region. Okay, so that gives us just a little bit of context. I hope that's kind of invigorating and you're resonating with that. And we're going to go into looking at a little bit more specifically, what's the one thing we want you to anchor to, we want you to really understand, we want you to consider the implications of your business in 2025. So we will start with Brazil, and I'm going to have Cesar tell us a little bit about what he's seeing.
Thank you, Lindsay. So I think for Brazil, I think the story couldn't be different than Pix, right? I think here we are basically looking at the P2M volume, so persons buying from merchants. And what we can see is that Pix has surpassed debit first quarter of 2023, and it's now very close to credit cards, right? What we actually foresee here is that with the Pix automatic launch scheduled for June, and the Pix NFC is scheduled to be ready by the end of this month, and then I think we're gonna still need some time to see that rolling out. We see, I think, the potential of Pix to start stealing market share from other payment methods, like Lindsay said. So I think traditional Brazilians, I think traditionally pay a lot of the P2M larger purchases through boletos. And then I think Pix Automatic has a good potential of start like shifting volume from boletos into Pix, right? I think as we have seen in the past with Pix, some merchants offer discounts for Pix over cards, for example, and that can be a possibility with Pix Automatic. I think in addition to be a potential replacement for cards with subscription, streaming, all those type of things, there's a strong possibility of Pix stealing market share from boletos on the subscription, like subscription expenses for the household. So gym memberships, the schools, college tuitions, all those things. So it's a big potential. We see that as a big potential. And I think as a whole, as you can see in the bottom, we have cards at 34%, money movement at 54%, and cash at 12%. Like Lindsay said, I think cash it's probably, we are still moving towards digital, but I think the biggest battle for the coming years will be between cards and the money movement, and how Pix as an infrastructure play, as a rail, can I think interfere in all those different products.
Cesar, and tell me, what do you think? So Pix Automatic, right? We know that there's this and other innovations coming to Pix this year. What about Pix, contactless Pix? How do you see that having an impact this year?
Yeah, I think it's going to be, we're probably going to see different phases. I think the first phase, right, like beginning this Friday, the banks should be ready to offer Pix NFC from infrastructure perspective. Then we are still seeing the wallets adjusting to that. So Google Pay probably will start offering that right away for some banks. Apple Pay and Samsung Pay is still developing the solution. But I think from a convenience perspective, it is something very appealing, right? I think so right away, what we see is that there's a huge potential for Pix to start replacing the debit card transactions at the POS. I don't know if that's going to be driven by incentives or not, but to be honest, like from a consumer perspective, if they are both equally convenient, we don't know what's going to happen, right? I don't think there's a strong reason for people to keep using debit instead of Pix. I think the second thing would be, once we have that infrastructure in place, what's coming next, right? And I think as the product evolves, as the limits will go higher, what are the other use cases that this NFC connection can bring to Pix, right? And then it goes back to using Pix as infrastructure or a rail. What else can be tied to that transaction? So can we tie like a BNPL type of transaction at the POS? Can you pay using half crypto, half multi-currency wallet? So I think the options are endless, but I think it's a big play from infrastructure perspective.
Terrific. Okay. Wonderful. Let's move on to Mexico. And something similar here, but obviously, Mexico does everything special. So Annabelle, tell us what you're seeing in Mexico.
Thank you, Lindsay. Yeah, Mexico does definitely make things very special. And what we are seeing is that Pay and cards are pushing digital growth. Low value Pay transfer, the transfers that take place between people, are gaining popularity, for example, within small and informal businesses, as they are using their personal accounts to accept digital payments, and they are not missing out on sales through this. For example, people can now pay to an artisan via a pay transfer, which makes it very easy. And if we think, for example, in contrast of alternatives like Cody and Demo, they've had a bit of a slower growth due to concerns about QR codes, scanning, fraud. But Demo is performing a bit better than Cody. So despite these innovative options being available in the market, Pay, Clave, the Clave code remain to be the preferred methods for money transfers due to their safety features and quick processing times. That's why we are seeing these very, very strong growth rates for 2027 for Pay, for example. And thinking about credit cards and debit cards, their usage is increasing as well. We can see strong growth rates for 2027. Their usage is increasing as people become more comfortable with electronic payments, as e-commerce expands. Banks are also encouraging their use through rewards and promotions. For example, meses sin intereses, cashback offers, benefits, points, sales events like Hot Sale Buen Fin have transformed people habits as banks and merchants offer promotions as well for card users. So cards are increasingly being viewed as a convenient and secure payment method. Fintech has also influenced. The rise of fintech has made cards accessible to a wider audience. For example, younger consumers who are open to these innovative options have access now and increased access to cards. So this all is playing into how Pay and cards are growing in the market.
Yeah, I think what I find fascinating about Mexico, if you look at cash penetration, right? We talk about Mexico as being behind in digital payments, right? And it is based on how large of a market it is. But when you look at, I think it's not getting enough credit because look at how fast these payment methods are growing. This is volume from the central bank, right? Credit and debit card both growing more than 30% as well as Pay. Low value and cash, just 18 months ago when we were looking at this data, maybe 24 months ago, cash was over 60%. And so Mexico is going through a transformation. It may not be as radical as what we've seen in Brazil, but I think it's kind of happening a little bit more quietly because you don't have like the transformational impact of the central bank revolutionizing payments, right? But it is, I think, private sector driven, consumer adoption driven. And this low value Pay, I think, is quite interesting to watch. In the past 6 months, I never heard of people about Pay, but just in the last 6 months, over and over, I hear, oh, small merchants are accepting Pay, small merchants are accepting transfers as a way to get into the digital payments. So, definitely some exciting things to come from Mexico this year.
Definitely.
Cool. All right. So we already have a question in the chat from Colombia. We're going to move there right now. What we're seeing in Colombia is, the onset of account interoperability. Now, as a precursor to the launch of an official Pix-like RTP system, branded as Breve. Okay, this is announced to be launched in the second half of 2025. And I think what's most interesting about Colombia is it has most closely replicated or attempted to replicate Pix than any other country in the region. There was a lot of press, talking about the collaboration between Brazil and Colombia. And we see this in action. Already, Bancolombia and Davivienda are enabling the llaves, basically aliases for people. You register your alias so that you can participate in this RTP scheme. The use of the word llave is very indicative, right? That's the same word used in Brazil, and I think shows trying to walk in Brazil's footsteps. So I am optimistic about this potential, this launch and development in Chile. I'm sorry, in Colombia. And like Brazil, I think Breve has, you already have some very powerful wallets, not as many fintechs, but you do have a very decent fintech and wallet movement in Colombia. You have very brand banks with very large and important brand presence across the population. If this is embraced by those players, I expect this to scale and have a similar impact on cash as it did in Brazil. So cash right now in Colombia is around 38-40%, highly concentrated among small merchants. All of the lessons we learned from Brazil, we could probably expect to take place in Colombia, depending on how successful the rollout is, and if it's on schedule for the rest of 2025. Okay. Argentina, always an outlier, Argentina. And again, a lot of our trends here are talking about, the development of A to A. In Argentina, the biggest thing to pay attention to in Argentina is the current administration and deregulation that's occurring. This has always been a market that's difficult for investors, difficult for businesses to have certainty in, but there is some optimism with Milei's administration and a clear path for deregulation in the financial sector. Some recent key developments: prices starting to just be displayed in US dollars, dual currency debit cards, tourist dollar policy, right? So a semi-dollarization of the economy seeking to provide currency stability and the ability for people to transact and have and engage in commerce. And dual currency debit cards, what's that going to do? That's going to boost debit card volume, because now I can access dual currencies and I can have that much more purchasing power and that much more certainty in my transactions. So we've got already deregulation in cross-border currency, the removal of taxes and fees. And so what we can expect is just business growth overall, which is definitely positive for the fintech and payment sector. An increase in cross-border, we get a lot of inquiries from cross-border payment processors and merchants. What about Argentina? We know this is a fantastic market, very tech-savvy, aware, engaged, brand-conscious consumers who've been, unfortunately, marginalized from cross-border trade in a lot of ways. That's going to kind of be overturned this year. So, and what this will ultimately do is empower debit card and digital wallet expenditure, credit card as well, but most of this innovation is going to be impacting debit cards. So we can expect that money movement side to continue to grow and be really a boon for commerce overall in Argentina this year. Okay. Chile is has a totally different pattern from the rest of Latin America. And Chile, like Brazil, has really succeeded in removing cash from daily life, standing at around 16% today, and is a very traditional, very strong card market. It is probably the strongest card market in the region. Not only very high card penetration, but very successful contactless implementation. And with over 90% of face-to-face transactions being contactless, you have a really robust contactless issuance and acceptance landscape. What that does is that promotes card-based innovation. All right, and what you've seen in Chile are certain trends that this infrastructure allows for, right? Software-based acceptance, or soft POS, right, on Android phones, enabling tap on phone or tap to phone, and enabling merchants to have much more flexibility in a software-based approach to acceptance rather than being attached to hardware. API-based integrations with lots of other business services. That type of card infrastructure is allowing for more value add to be flowing to the merchant. Contactless infrastructure allows for self-service, and that allows you to get more into low ticket retail and new verticals like parking, like vending machines. This little photo here, this is not new. This was launched, I think it was 2023, but kind of, there are very few examples in the region of, cashierless stores, right? Smart autonomous mini marts where you can interact with an app. You tap your phone, you do one-click digital commerce in their app, for example, and you're able to check out totally seamlessly and on your own. This is the type of innovation that a card-based infrastructure allows you to enable. Digital wallets, right? This is a great market for Apple Pay and for Google Pay. with these guys surging to the top of wallet for overall payment behavior. Okay. Moving to Central America, I think this one is actually really important that we start to understand. Costa Rica, Simpe Mobile has been around for quite a while now. Instant transfers, instant P2P transfers, and increasingly important in P2M. And Simpe really grew during the pandemic. Still, when we're talking about P2M transactions, or actually purchases at merchants, volumes are small compared to cards, but they're still relevant and are growing. Now, what has taken place and what we think is going to happen in 2025 is that, first of all, banks have really embraced Simpe Mobile and are promoting Simpe to their customers. Unlike Brazil, where you can have multiple bank accounts attached to Pix, right? You can only have one bank account attached to your mobile phone, one alias, one bank account. So banks kind of fight over customers, right, for their Simpe Mobile. This has been such a digital evangelizer that the country actually experienced declining sales tax collection because Simpe transactions are not subject to VAT or IVA retention, whereas card transactions are. So what does this tell us? This tells us that purchases, P2M, are flowing to some extent away from cards and to Simpe Mobile, which is a huge statement in and of itself. Now, the government has announced considering enabling VAT retention for Simpe transactions in 2025, which will dampen that growth a little bit. And so now we're starting to see a little bit of balance achieved between payment methods if this actually goes through. And we're going to talk about this a little bit more, but points to a trend of formalization, general monetization of these instant P2P or instant A2A schemes. Okay. And then finally, in Guatemala, I think this one is also really fascinating. Guatemala, again, is one of these very cash-heavy markets. We're lacking in infrastructure, lacking in acceptance, lacking in banking penetration in general. You may have heard of Quick, which is VisaNet, now NeoNet, right? One of the major acquirers in the region, in the country, launched Quick, which is an interbank platform. And it's actually instant payment and digital wallet interoperability. But what's fascinating about Quick is that it's the first case in which A2A and cards are presented equally in terms of pricing. And this is really, really, really interesting. And this is, in many ways could be considered a best practice for rolling out digital mobile-based commerce. So what Quick does, right? You can pay via QR code from bank accounts. It also enables NFC payments, and it's accessed via your mobile banking apps. All of the major banks in the country are participating. What's most revolutionary about this is that there's a flat P2M fee. So P2P is free, like most schemes are, but when you're paying a merchant, there's a flat fee of 1.5%. Doesn't matter what payment method you're using, including credit card, right? There's no differentiated interchange in Guatemala for debit and credit cards. So placing, presentment parity and pricing parity between transfers and cards. Now, there's still a lot of work to be done here. This hasn't necessarily scaled to high numbers. There's some user experience issues. There's acceptance issues. There's a lot to be solved here, but this is quite interesting to look at and to learn from. Guatemala has taken best practices and learnings from other regions, and I think is a wonderful example of acquire bank network partnership, and we'll see how it evolves and develops this year. Okay. All right, so we have some great questions coming in. We'll start to kind of address those a little bit through our comments in the next section of this presentation. But what we're going to do now, we've kind of covered the one thing that we think is really critical that you pay attention to. Now we're just going to kind of have more of a high-level conversation among the panelists, right, in our final sense making. So what we're going to do here is bring each of these one things, right? How do they come together to make a story for the region, and what are you what are we kind of getting out of this analysis? So first of all, one observation that we could make, or one kind of conclusion, is that we know that interoperable A to A or instant or RTP really truly is a reality all around the world. And with that, what that means is that banks are now in the retail payments business. It's not just the card networks. They're not in the retail payments business through the intermediary. They're directly in the payments business. And so, Cesar, I want to ask you, in Brazil, you know, where this is most entrenched, what is this? What can you explain what this means a little bit more? And then why does this matter? What are the consequences of this trend that we're seeing?
Yeah, absolutely. Yeah, I think it's a combination of a number of factors, right? I think the Brazilian central bank, even before PIX, when created the payment institution framework, which is the money license framework for companies operating in Brazil, already has created this path for companies to handle payments, right, like banks. And in the same way, I think when PIX came, banks were kind of like catching up with fintechs to offer PIX through APIs and to create like all the developer documentation and everything else. So I think you are right. I think banks are, especially if you see from a branding perspective, a lot of the banks in Brazil, they used to have treasury management, treasury services, cash management. Some of them are actually named payments today, right? And they serve companies trying to bring a value proposition, not only from the traditional payment methods like we discussed, boletos, bank transfers, FX, but also APIs and payments and PIX. Most of them are actually, they have acquirers too, so they are also offering acquirers. If you see banks like Itaú, for example, they had a Rede, which is a large acquirer in Brazil, and from commercialization perspective, they now have a single officer, and this single officer can serve clients and can discuss with clients payment needs, both traditional banking needs or also card acquiring needs. Right, so I think it's probably a movement that has begun in the past with the gateways trying to group all the different payment methods, but it has grown into every single player. Honestly, every single player. I think banks, payment providers, shopping platforms, everyone in Brazil at this point is becoming a full provider.
A full provider, right? Yeah.
Yeah.
And banks can be, in the past, they've kind of gone through the networks, right, to get to consumers, or at least partnered with them, right? But now banks can be very assertive with their branding to customers directly, since they're directly in the payments game. And that we see that. We see banks fighting over consumers to get them to have PIX with them. We see that in other markets. So it just the intention, right, of PIX was to increase competition. I think that's what it's doing in a large way.
Exactly, and I think the interoperability also pushes or level set the landscape for digital banks, right, and fintechs. So the leverage that the banks had in the past, the retail banks have in the past with the branches, this is almost non-existent. So banks are closing branches, everything is going towards digital. So it's becoming more competitive.
100%. Great. Okay, and then similarly, kind of alluding back to what we saw in Costa Rica, A to A payments are reaching a crossroads, right, in which towards more formality and even monetization. So we actually see we see Costa Rica attempting to implement tax on Simpe mobile transactions. We see Guatemala somewhat leapfrogging, in a way, by establishing a flat 1.5% monetization scheme. So, when something is offered free or very low cost, it can be difficult to maintain innovation and technology standards. And so, Cesar, tell us what you think about this in Brazil. I know there was an attempt by the government to impose some tax. Kind of, how do you see this playing out in PIX?
Yeah, what we had seen in the beginning of the year was the government saying that it would be mandatory for banks to report any PIX transaction that the beneficiaries would receive over 5,000 reais per month, and that would be mandatory for banks to report that into the local IRS, right? And that was a big, I think it was a mix of confusion. People were afraid of that. Some people were actually concerned that this visibility can lead to an increased tax collection, right? Like I said, a lot of the people that were informal, that were receiving a lot of cash, they now accept PIX, and PIX is a big chunk of their business. So having that visibility was a concern. And just to put that in numbers, I think the first 15 days of January compared to the 15 days of December, of course, there's a seasonality aspect there too. December tends to be a more busy month than January, but we saw PIX volumes dropping almost 15%. So that means 400 million transactions in 15 days, just backed by those concerns. So yeah, I think tax is a big concern, and monetization. I think we haven't gotten there yet, especially because the interest rates in Brazil are very high. But as soon as the interest rates go down and that starts to hurt the profitability for banks, I think the monetization topic might come up again.
Yeah. And in Mexico, I think, I think it's a real challenge that the industry is facing, because RTP has been so successful in digitizing cash. It's almost like PIX is the new cash, or a lot of times small merchants, like in Mexico, small merchants will accept a transfer before cards, because there's this sense that it's like still informal to a certain extent. There's this sense that it's not being monitored in the same way. We see that in with SinPay, right? There's this belief that transactions are still somewhat under the table, even though they're digital. So how do you then, for a question that governments need to be asking is, how do you then transition that to a more formal landscape? And a great question for acquirers and card networks is, how do I encourage a movement from free or very low cost P2M to an MDR, right? And am I, because what you're saying in Cesar in Brazil, fear of tax, usage goes down. If I'm going to hit a certain threshold, now I'm going to get charged a fee, usage is going to go down. So what is the value add I need to contribute to that user at that stage to ensure and encourage consistent usage? And is it your sense in Mexico that that's kind of the feeling of merchants who are using SPAY or a wallet as opposed to cards? What are your thoughts on that?
Yeah, definitely, Lindsay. And I think in the same line as what we are seeing in Brazil, taxation and taxes are playing an important role in decreasing the usage of cards, fear of being detected by the SAT and by taxes. So definitely this element of tax is playing an important role in how this is played. Monetization as well. SPAY is free. The transaction for SPAY is free. While cards, if I start to accept cards, if I'm a small merchant and start to accept cards, and my income is 12%, and you're going to charge me in a card transaction 8%, 5%, 1%, it's a lot. So it's definitely going to impact usage.
I think a big question that the industry needs to think about solving is this question around formality, the formality of RTP, the and governments. How do I encourage formalization, tax contribution to expand the formal economy? Is that something that, as you get into full-fledged digital payments, that's a reality, right? Right now, there's this very large gray area that's been established. Is that gray area going to persist? Is it going to graduate into a fully formalized situation? Is it going to revert back to cash if there's some kind of monetization place? That's a big question that needs to be addressed. Okay. Now, as RTP, A to A, push payments have scaled and grown, a topic that has not been addressed very assertively is fraud. Specifically, push payment fraud coming from these schemes. Only recently have we started to receive some requests from clients to actually study this, study consumer perception, study actual incidents. So Cesar, what are you seeing with Pix? Is this something that is having an impact? Is there an opportunity for service providers here? What are you seeing in Brazil?
Yeah, I think differently than other markets, Brazil isn't a push payment market, right? We don't have ACH, direct debit, the way you have in the US. Pretty much everything that has been initiated or pulled out of your account, you need to authorize that. The only thing that might be similar would be for utilities today, that you can actually give your bank a mandate to debit your utilities every month, right? But rather than that, you don't have a push payment instrument up until probably Pix Automatic, right? Which is going to be which is going to follow the same pattern of you providing a mandate to your bank or to the merchant to pull the funds from your account. But I think that might be a big test for the country in terms of seeing a push payment at a scale being done. So I don't think we don't have anything comparable at this point. But fraud is a big thing with Pix, right? And you have fake call centers calling people every day, trying to do like a WhatsApp takeover, social engineering. So this is a huge problem for the country. Not only because of Pix, but Pix has since it's irrevocable, it's instant. I think it has boosted the scams.
Yeah, in the US with Zelle, there's been some backlash recently. There's been some lawsuits against banks operating Zelle. There's been banks like Chase have been restricting Zelle due to fraud. There has not been a wave of innovation or even, much interest in issuers or fintechs or regulators kind of solving this and addressing this. And this is something that needs a lot of research to understand, to quantify. And it's really a risk for these systems going forward. At the same time, they're still growing, and they're in general low ticket transactions, less risky. And Anna, let me ask you, in Mexico, we were talking about this, right? User experience and how do you instill trust. There's a sense, I think, among a lot of Latin Americans that going into your bank app and initiating a transfer is safer than a card payment. What are your thoughts about that?
Yeah, definitely. I mean, you have your mobile, you have probably biometrics, you are protected by your bank, you have the control in your hand. And when you are handing your card to the merchant, your card is not in your hand anymore. So you are opening you have a security open opportunity there for your card to be duplicated or to be falsified. So yeah, you have your mobile in your hand and you are safe with your mobile banking app in your control. But still, in Mexico, we're receiving, as in Brazil, a lot of phone calls of fraudsters wanting to break into your mobile app, but you have to give them permission via the phone to do it. So that's why it's considered safer.
So, despite the fact that the card networks have decades of experience managing fraud, detecting fraud, they have a whole suite of services against, to protect against fraud, there's a perception there that other methods may be safer. Whether or not that's true, that's a question to be answered by looking at data. But there's also a narrative to be told, to get the truth out to consumers or understand what security and trust means to them, and then cater to that, right? Okay, and then what we're seeing, with the mix of these rails, right? New economic models and value propositions are needed to penetrate traditional verticals. So we looked at that big chunk of traditional money movement, which is still 22% of all payments in the region. These are really hard to disrupt. And if we want to continue growing in digital payments, this is an area that is ripe for the taking. However, it requires a different approach. So Cesar, I wanted to ask your opinion on that. In Brazil, for example, where cash really isn't like a terrain to grow in anymore, there might be a push towards traditional money movement. What do you see as the opportunities in Brazil there?
Yeah, I think for B2C, probably I think Pix Automatic is going to be the big thing for this year, to see how that can play at scale. Like I said, first for the purchases that could eventually replace a card on file, like streamings and platforms. And secondly, by everyday purchases, right? Like things like utilities, tuition. I think this is probably the big thing, like rent, insurance, those payments that do have a much larger size. So from a money movement perspective, they are very represented. And then the second piece, Lindsay, I think it's the B2B, right? The B2B is where the money is actually very, very large. Tickets are much larger, and I think there is still a lot to happen, right? I think not all, especially looking at the traditional industries, not every company uses Pix. Most of them work Monday to Friday, 8 to 5, so they are fine with bank transfers. They're fine with boletos. But I think gradually they will be moving towards real time, right? And that means payments 24/7, receivables 24/7, liquidity management 24/7, fraud 24/7, data analytics. The amount of data and the complexity of data has increased a lot. So I think on the B2B, there's a lot to happen within this year and the coming years. But probably on the B2C side will be probably Pix Automatic.
Okay. Terrific. I'm going to move right on as we approach the end of the hour. And this last one I think is really interesting, right? In order to continue growing on top in markets where digital payments are already deeply penetrated, the smart deployment of digital features are needed to supercharge existing digital flows. And Cesar, I wanted to ask you how do you see this following the example of Chile, right? What examples do you see in Brazil? What leapfrogging could we expect in Mexico, right? We have pervasive RTP rails, we have pervasive card rails. What can companies do on top of those rails, right, to propel their growth?
Yeah, I think that's a good question, and I think you already answered I think the question. I think the companies should be more worried about the infrastructure and the rail than the front end itself, right? I think we came from a wave where every company thought they needed to have an app, but as like consumers are also getting saturated with apps, right? And you cannot have one app for I don't know, like a parking provider, like a parking provider or a garage provider, because we have like 5, 6 large providers. Like you're not going to download 6 apps. So I think we're going to get to a point where either things will flow through a single platform, like WhatsApp, for example. I think we have seen a lot of the digital banks, like new digital banks, trying to create a value proposition under WhatsApp, so consumers don't have to access a bank app; they can transact over WhatsApp. And also invisible payments, right? Like everything that can be done. So payments become less of a friction of what it is today. I think those are probably the biggest trends.
And Cesar, a question just came in, I think is really relevant to this question. Value-added resellers have developed a lot of integrated solutions for specific verticals, education, restaurant, medical services, in the US, but we don't see those type of software companies growing in Latin America. Do you know the reason, or how do you see, that particular trend?
Yeah, I love this question. I mean, I love the SaaS vertical topic. For me, it's a big thing. I think it's definitely happening at a smaller scale, right? I think my thesis is that um, banks won't be able to disrupt the SMB space, and fintechs by themselves probably won't do that either. It has to be a vertical SaaS, right? And a big component of vertical SaaS will be embedded finance. So I think finance, like financial services, will be a big part of it. But we're starting to see some segments like education, like restaurants, agro, real estate, some segments like doctors, like clinics and healthcare providers. We're starting to see some vertical software providers, but more focused on the SMB. We don't have yet any good examples like you have in the US with Toast or other providers. But it's definitely growing. I think it's a space where we have a lot of people looking after today.
Yeah, and a big opportunity, right, to maybe even bring some of those companies to Latin America, or copycat style, and tropicalize, right, too, because they're fantastic models, right? So, okay, wonderful. Well, we're at the top of our hour. Before we do have some questions, we're going to hang on the line for those of you who can hang with us to answer some of these questions. I do want to take advantage of two things before we go, is to let you guys know that we have two upcoming webinars, the same format for the United States next week at the exact same time, and the following week on Asia Pacific. So if you're interested in those regions, please take the time. You can scan the QR to register for those webinars. And then those of you who have been asking, when is the Coffee Chat series launching once again? That's going to be the following Wednesday, March 19th. It's a new day, a new time, new approach to Coffee Chats, but we are starting that March 19th. You'll get a notification in your inbox. So I'm going to leave this slide up so you guys can take some time to scan, and I'm going to ask you for one last poll before we go. So we just saw those 5 key big questions that kind of we think the region is boiling down to. We'd love to understand, how would you like to engage with PCMI this year, right? You come to our webinars and receive our content, and that's fantastic. And we want to continue doing that. We want to add even more value and move the needle even more powerfully for you. So if there's a specific engagement you have in mind, an idea you have that you want to discuss, if you're interested in some data, please let us know. We want to make this easy and seamless, and we'll get in touch with you so we can discuss that. So I'm going to leave that up on the screen just for a moment. And while we do that, for those of you who can stay on for the next couple minutes, I'm going to have a bell come on, and we'll take some questions.
That's right. Thanks, Lindsay. And we're sort of winding down with the poll here, trying to give folks a chance to respond, and then we'll get started with the questions there. Think about another 5-10 seconds to do it.
All right.
All righty. So let's wrap this up and get on to the Q&A portion of this. So there's an interesting question here from Raquel, who's asking, what are the expectations for Pix in installments in Brazil?
Yeah, I can take that. Hi, Raquel. I think it will be continued growing. I saw some articles last week too talking about it and how it has grown in popularity, and especially I think in challenging times, high inflation, people are using that more than ever. So I think we have seen different models in Brazil between banks and fintechs, but I think they are both very successful at this point. I think they have helped the banks to recover some of the fees that they lost with Pix itself. I think the credit has helped them definitely. But let's see. I think the big thing for Pix this year will be automatic and NFC. I don't know if the central bank will be able to implement any other new changes such as Pix credit and other products that they have been discussing in the past. But I think the scenario is definitely bullish for Pix with installments.
All right, thanks, Cesar. We have another question from Carla, different markets. She's asking about Guatemala. She's asking if in Guatemala, will merchants continue to favor cash to save MDR as a new A2A solution is at par with debit and credit?
Yeah. Great question, Carla. First, for sure, Guatemala has a long way to go, to a long opportunity to develop still, and merchants are still going to favor cash, especially small merchants. But a 1.5% MDR is a vast improvement over 5, 6, 7, even 8% that merchants experience when accepting cards. And 1.5%, I mean, that's pretty reasonable. That's a reasonable operational fee. If the app and if the service is giving you value in terms of reconciliation, being able to manage your business better, reduction in cash, and being able to, monitor, getting you access to your data, right? If Quick is able to deliver on some of those organizational and data services, I believe a very good chunk of merchants will think 1.5% is more than fair. The thing about small business acceptance is that it really needs to be segmented. You have a very large group of small businesses, even in Guatemala, that are ready to accept digital payments. They just haven't had service from the bank. And then there's a much larger segment who are not ready. And it'll take digital organic growth and digitization of the market to produce that.
All right, thanks. Now we're shifting to a more general question from Nathan, which is seeing that some countries in LatAm are advancing in local electronic payments such as Pix and SPI. How are the initiatives for cross-border payments developing?
I think I can take that. I think what we're seeing for all the different features is that usually the private sector moves faster than the public sector, right? And what we're seeing for Pix, for example, we have seen already some schemes like PSPs trying to offer Pix as a payment method for people traveling to other countries. Depending on the use case, they can even, if the PSPs can connect to instant payment schemes, they can provide like real-time effects. So we are seeing some use cases, but mainly driven by the private sector. Brazil, I don't know if it's officially or not, but they are in talks with the BIS to become part of Nexus, which is a protocol and an international framework for interconnectivity between instant payments. But I think it's still in the very beginning. I think we'll be some time up until we see that formalize. I think that should be starting with P2P transfers at some point, and then I think on the B2B side will take some time.
Mm-hmm.
All right, thank you. Now Carolina has a very straightforward question, which is where do you see opportunities growing in Chile?
Yeah, Chile is a great market. Unfortunately, it's just a small market, but it's in terms of population, but it's very robust and mature. Couple of ways, couple of growth. E-commerce continues to grow at in double digits in Chile. I think a big area for disruption in Chile is building on top of TEF, right? Building on top of existing. Chile's had instant banking infrastructure for a long time, but it hasn't been brought to consumers in the way that Pix has, right? Building user-friendly features on top of TEF to enable P2P. We just haven't seen that revolution take place in Chile. That's a big opportunity. And then this, what we've been saying about moving into traditional verticals, how can we disrupt, rent payments, mortgage payments, insurance payments, healthcare payments, parking, your monthly condominium fees? These are all taking place with direct debit or some kind of pretty efficient bank transfer mechanism. But is there a way to add value to those transactions, to capture those transactions with a fancy brand that is going to engage consumers, right? This is the question in mature markets. It's what are the new areas of digitization that are imminent, and how can I get my foot in the door there? And then on top of, expanding use of Apple Pay, expanding use of contactless, finding new use cases for contactless payments, the automated smart payments that we saw in Chile? How can we expand that to other verticals and just make payments even faster and more transparent utilizing NFC?
All right, thank you. There's another question here that's focused a little bit more on the future. This is from Leonel. So his question is, according to some statistics of Silicon vendors, the usage and manufacturing of credit or debit cards is increasing. So how do you see the coming years in LatAm? Do you see that cards will still be used, or are we going to be digitizing in the coming years?
Yeah, that's a great question, actually. You really have to take this on a country by country basis. Okay, markets like Mexico will continue to be a really plastic heavy country because you don't have deep penetration of NFC, Apple Pay, Google Pay. We really haven't seen wallets take off in a significant way. So Mexico and other markets, you know, similar to Mexico, will still be really card heavy. Cesar, I'm curious on your opinion on Brazil there.
Yeah, I think Brazil is fastly walking towards digitization. I think more people are using, like, a bunch of the cards today in Brazil. They don't even have the number written in the card. So people are getting more and more used to have those virtual cards embedded into their banking platforms. And Apple Pay, Google Pay, it's heavily used in the country. So I think if we keep that growth pace, I think we should be expecting the cards to be fully digitized in 5 years, 10 years. I don't know.
Mm-hmm.
All right. Antonio has a different question in a different direction as well. And his question is, what is your view on stablecoins in LatAm, not just for cross-border remittances, but also for possible retail usage following PayPal's recent announcement of offering its own USD-pegged stablecoin?
Yeah, go ahead, Cesar.
No, go ahead.
I was just, you know, when we think about stablecoin for Latin America, it's truly in cross-border. You know, we already see it in place in Mexico, right? The Mexico corridor, some really interesting fintechs using stablecoin. Certainly for Argentina, you know, there's a great application there. I personally haven't seen there any demand or application in domestic payments. I don't know if you guys have if anything comes to mind.
Not for Mexico.
No. I think we all at PCMI, we generally kind of love stablecoin and the value proposition that it brings, and you know, just needing to get institutions to feel comfortable with it so that it could be brought to consumers. You know, the best application of stablecoin, the branding has nothing to do with blockchain, nothing to do with stablecoin. The consumer has no idea. You know, it's just a money movement scheme. And, you know, it's just getting those solutions to scale, really. And I think there's fantastic opportunity.
All right, thanks. Now we have a question here from an anonymous attendee that's specifically focused on Peru. So here, this attendee is asking, how do you think that payment media players in Peru will be able to reduce the huge gap that still exists in the use of cash among the unbanked, given that the BCP has not yet achieved this with its P2P products outside of the bank?
Yeah, that's a great question for Peru and any other market with large cash, especially in rural communities. Now, in the urban centers, Peru has been great. BCP and other, you know, Plin and the other banks have really done a very good job at reducing cash among banked customers. What needs to be done is, first of all, more fintechs, so not, or even banks that continue to make non-bank brands and simplified accounts that are not the same as a bank account. Okay. And tying that to very basic usage. I mean, this is the fintech playbook. We just haven't seen it materialize in Peru as strongly because BCP has been so dominant. So mobile app, mobile top-ups, bill payment, remittance, these very basic features, giving people who have never had a bank account access to a simplified account, and then trying to tie those functionalities to other commerce areas, create linkages between other people who do have bank accounts, like people who want to pay domestic workers, people who want to send a domestic remittance from urban to rural, creating those urban-rural linkages, right? You just need to find where is their need to make a payment and where can that payment add value to that person's life. The banks have just been concentrated on their own customers. So there has to be the development of appetite to go beyond that. And that's really been done by the fintechs. in most countries.
All right, so we have a question from Marcos that's asking about how far do you think we are in LatAm from China and Japan and other Asian markets in terms of one-in-all mobile payments?
Yeah, Cesar, you were mentioning that a little bit. You want to expand on that? You know, not everyone wants to have 6 or 8 different payment apps. What are your thoughts there?
Yeah, I mean, I have been hearing that a lot lately, like a comparison between in China and Brazil. I think it's in China, you basically have 2 very large apps, right? Like everything runs with WeChat and Alipay. In Brazil, you still have a number of apps. Like all the banks are trying to be the single app, so they are all trying to become a super app somehow. But I think first thing is I honestly don't know if the consumer behavior in Brazil it's similar to the consumer behavior in China. I mean, we have seen some like Chinese marketplaces, Chinese ride-hailing companies in Brazil, and the apps look much different than the apps that Brazilians actually use, right? I don't know if the super app idea will become reality in Brazil. I don't know if we're gonna follow the same pattern, but it's definitely, I think, things moving from a number of apps to consolidation. But I honestly don't know what consolidation will mean. I think that's very connected with there. I think there's another question around open finance, and I think open finance has the potential to bridge that gap, right? To bring all your data together so you can make better decisions. You can have a single platform to orchestrate all those different things.
100%. Okay, guys, we are gonna cut it there. We have just a couple more questions, but we're over time, so we're gonna wrap it up. I just want to leave you with this final slide here and what our mission at PCMI is ultimately. You guys see it from us and how passionate we are about these topics. What we want to do is be so committed to your success, you know, that we exceed all other consultancies that you may consider working with. And what it really comes down to is that we help clients achieve their goals faster and have greater impact ultimately. And I hope that through this content, through this conversation, you get a glimpse of how our innovative thinking can help you do that, and that would inspire you to want to work with us. So thank you so much for being here. Thank you, Cesar and Annabelle. Thank you, Abel. Great questions, great conversation. You will all receive the recording and the materials. Feel free to follow up with us. We'd love to have one-on-one conversations and engagements following this. So thank you very much, and we hope to see you next week for the one thing for the US market. All right, take care, everyone.